traders, welcome to the TMT stock market strategy video for Wednesday, July 13th. Well, the rally continues. We had a little bit of a move up, and then at the end of the day, they started to sell off. I think the market is due for a rest. I mean, you're talking now 10 out of 11 days, literally straight up. And this is where what happens when you have a runaway market to the upside and to the downside, right, really. And this is all these algorithms. They just keep probing and probing. But then when it stops, everybody starts to get hurt. And what I mean by that is that everybody keeps buying up into these areas, and then the market pauses, pulls back, and next thing you know, you got a move to the downside bigger than the move that was to the upside. Doesn't always happen, but you have to understand, okay, where are we now in this little bit of a rally? So we consolidated to the upper end of the range from March all the way up until our recent Brexit lows. And I do see if this market is going to have any legs, the pullback is going to be monitored very closely, and we'll get into that in the index chart. So what do we think? Do we pull back here? It is options expiration, monthly options expiration, I should say, and it usually gives a quite bullish view for that week. Now, we do have earnings that kicked off with Alcoa on Monday, and we have some bank earnings that are coming up. So that's really going to be a good sign. It's really what they're forecasting. What's going to be, what are they saying in the next couple of quarters? What's their earnings estimates? Did they beat earnings? And what are they forecasting? What's their guidance? And that's really what's going to be interesting to see if they are making money. My guess is that it's just going to be as worse as it was in the the first quarter. So, and if that happens, do they sell the news? And that's something that that we have to pay attention to, right? As traders, we need to pay attention to what and how the markets react to their earning numbers are. Okay, and we are now coming into a seasonal peak in the indexes where the markets tend to rally for a couple of days into July, and then they pause and they start to pull back, and they actually pull back and give back most of the gains that happened in the latter part of July. Okay, so just keep that in mind. Doesn't have to happen, guys, but we know, and I like to follow the seasonal trends. Very, very important. All right, so let's go right into it. Are we at these washout levels? Well, yeah, we are getting real close. I'm just going to show you a few at 84%. To me, that's already 84% of all stocks above the 50-day moving average in the S&P. That to me is quite extended. We could get obviously even more extended here, like we did, but now you have to pay attention to weakness in the markets, and especially when you have 10 out of 11 days literally gap up every single day from the Brexit lows. It's just, to me, is insane. That's not normal market conditions. We don't have normal market conditions in the last several years, and with these algorithms and HFTs that continue to actually run the markets, it's pretty tough. It's pretty tough if you're a day trader that you're looking for good spots, and next thing you know, you're gapped up every day, 10 points, 15 points, and then you have to look and you have to sit patiently and wait. And that's why patience in this market is key to success in trading, especially in this type of runaway market. When you have markets that just go one-sided, they're either up and or down with very little pullback. All right, so that's the stocks above the 50-day moving average. Let's take a look at the NIMO. McClellan oscillator, not quite overbought, but it is getting up there. So we do have definitely room to run a 70, 80, 90, even 100. So maybe one more pop, and then that should give us an overbought reading outside of those Bollinger Bands. All right, now the NASDAQ's a different story. NASDAQ, let me get there. I got the wrong chart out for you guys. The NASDAQ here is the NAMO. All right, and this is at 73%, so it's already reading overboard, and it is outside of its Bollinger Band. So let's pay attention to what the NASDAQ's doing today for clues. Also, the transports to see what is happening. But I do think that the earnings will take a precedent role in the direction of the markets in the coming days. All right, so here's the S&P. Here's these spiders, and you can see here, guys, we just had literally a blast right up, one little pullback. And now we're extended here, extremely extended. Don't buy stocks up here if you're a longer-term investor or a swing trader. Wait for the market to pull back. And this is what I'm saying. This is where, if this is going to really happen, and we had, as you can see, we've been in a consolidation mode all the way from March, actually from March here, right? So from March all the way to July. Now, if it is going to happen, right, this is what I want to see. I want to see this market to pull back or consolidate and take out a local swing high, and then that, to me, would excel the market to 2200 and 220 here in the spiders. Okay, but the market needs a pause or a pullback. You're talking almost 300 S&P points in 10 trading days. We haven't done that in I would say years. So we have to be very careful here. Okay, for looking for market to pull back, even into the 211.85. Let's call it. That's somewhere where I'm looking to pull back. And if it can hold and consolidate above the upper end of this range, this trading range, then I do believe that the markets will go higher before it goes lower. Now, even if it goes to 2200, the bigger move, and I mean the bigger move, not the Brexit move here, but the bigger move is to the downside. And I do suspect that we would look to see something like that coming into a seasonal time of weakness, which would be probably September, October. Okay. Next, we'll take a look at the clean area of the S&P. Just want to show you how extended we are. Very, very extended. So again, just be careful looking to buy stocks at these levels. Bollinger Band 30-minute. We're starting to get our uh, consolidation. Excuse me. So this is something that I'm going to be paying attention to for a move either way out. We have rallied here, as you can see here, in 3 days from this gap up. So again, markets need to breathe, need to relax a little bit, slow it down, and consolidate. Now, we have two gap areas here on the 60-minute chart. I want to make note to you guys, make this note available, 214, and then we have one down here coming in at around, let me just get that right there, about 210.60. So these are the two gap areas that I would suspect need to get filled. And again, doesn't have to happen today, tomorrow, but we are getting some small negative divergence on a 60-minute chart. You can see that here. All right, MACD, RSI rolling over just ever so slightly, but we get a little bit of a pullback. We are getting to, I am seeing some negative divergence on a 60-minute chart. All right, transports here definitely participated yesterday. Airlines did well. That's why transports did. But look what's happening. We're still horizontal resistance, and we have this trend line here from 2014 that capped a lot of this rally. So now I think it's constructive, but we need to break these symmetry lows, symmetry lower lows and lower highs, right? So let's see if we can get back above it. And if we do get back above it and we consolidate just like the S&P, then I think we can catapult higher, and then that would alleviate this downside pressure of lower lows and lower highs in the transports. And of course, it is our leader, so we want to see and pay attention to what it does. Same thing here with the IWM. I want to show you these are some of these levels that we put out in our Pro Trader Premier video, guys. Take a look. I'm telling you, it's bar none. These things work fantastic. These levels, you need to know where the support and resistance are. And I just wanted to show you a quick sample. This is the IWM, and this is what the 120 and the 122 area here. These are really heavy areas of resistance.